Yep, my name's Kiran Morzaria. I'm the CEO of Rare Earth Minerals, which has got an investment company with large equity and JV stakes in the lithium sector in stable jurisdictions.
It's funny you should mention that because I was in your office. I think it was the last week or the week before.
Yeah.
And I was speaking to Keith from European Metals.
Yeah, Keith Coughlin, the CEO of European Metals. I was in Mexico at the time, but it's a great asset. We always look at assets that have got very key strategic advantages, and that is about advantages that can't be duplicated in any other form. And European Metals, as the Sonora Lithium project, has a very good grade. It's a very large deposit and has a very low cost curve comparative to the sale price. So their cost curve is looking at around $2,100 a tonne to produce this lithium carbonate, which is used in the ever-expanding lithium sector. A sale price at the moment, assuming it comes to production, will be about $6,000 a tonne. So it's got a great margin. Same with our investment in Bacanora. Similar margins. Their cost curve's around 2,700. And we view the lithium sector as an up-and-coming sector within inverted commas the commodity market, because it's pretty vital to what we're doing now, to all the disruptive technologies that exist, whether it be EV market or the battery storage market. Lithium is critical to that to be a success. And we just look at recently the uptake of electric vehicles around the world.
Yeah, definitely.
And you're just seeing major manufacturers coming out with battery plants, and the upstream side, which is the mining and processing, the industrial mineral process of that, there is a gap in terms of production capacity. So we are very keen for key assets that are low cost, large volume, to be able to fill that gap come 2025.
I think you're really well positioned, to be honest. And I don't mean to keep going back to European Metals. But do you have 20% there or something?
Yeah, we have a near enough 20%. We have an option to go higher.
I would take that.
Yeah, we have.
I shouldn't say that, but I would take that.
We have a restriction, unfortunately, on the Australian Securities Commission not to go above 20%. So,
all right.
They're developing. They've still got to do some drilling to prove that up to what they indicated measured resource, and then they're going to go to what we call a pre-feasibility study by the end of this year, which will define the economics. But even now, with their scoping study, they assumed, if you take their revenue as a basic cost base, as we come to production, it should be about a 110 million EBITDA a year, assuming it gets on finance. So it's got very good revenue margins and should have an internal rate of return of between 20 and 30%.
Great. So that aside, you guys, so obviously for the shareholders watching today, where would you see yourselves going maybe in the next 6 months? What do you think?
I think in terms of progress across those assets, very clearly defined, and all of those assets have delivered to what they said. So if you told me a year ago, would they have a PFS? We said yes, and they do. Would they have developed an inferred resource and an indicator? We said yes, and they have. And we see the progress of all those assets. So the most advanced is the Sonora Lithium project, which will now go to bankable within Q1, by the end of Q1 next year. So the Sinovet deposit, or EMH, is one, will go to PFS. So we'll see value creation through the reduction of risk, the defining of the economics, and that will be attributable, of course, on our interest to us as holders in those companies. And we're also, I'm on the board of EMH as an executive director, as I am on Bacanora. So, we see these assets as ones that are next to come to production after there's a couple that come before.
All right, because today, obviously, we're at the Master Show today. Jim Mellon was on the stage, and he's talking about lithium. And it's the electric car industry, like you say, you look at Europe and everything, where they're going to get it from. It looks like it's the next thing. It does look the next thing. Lithium.
It is. It's vital for
it's
all
so important. Yeah.
It's a market at the moment that's about 180,000 tonnes of lithium carbonate equivalent, which gets produced into lithium batteries, and that's what the market is at the moment. Now, look at Goldman Sachs. They put out a research note basically saying that is lithium the new fuel? Is it the new energy storage?
Yeah.
Because they can see penetration rates within the electric vehicle market in America, basically going up to 25% of all vehicles made in America will be electric vehicles.
So get big, yeah.
So it's huge, and that's a massive increase in what does that mean to demand? Well, by 2025 we're talking about up to 400, 300 is the low end, 500 the top end, but let's call it 350, 400,000 tonnes needed. And there is not that upstream production capacity. The upstream at the moment is 170 to 180, as I said beforehand.
Yeah.
Then you've got some others like probably Orocobre, and then I would say probably Sonora, that will come to fill that gap. And we need that gap for actually us to use this stuff.
Live video, as you can tell.
That would be electric soon. I hope so.
Electric taxi.
Yeah, it will be. I mean, you know,
That is the story. It's the story that's just taken off, really.
well, I certainly do things like public transport. Public transport is, you know, a really great for electric buses and such, because diesel kills us effectively
Yeah.
when we walk around the streets. And we need, and public transport is known points from A to B. There's no issues of charging at the end of the day. They've got big capacity, sort of massive batteries there.
Yeah.
So I think the changes are going to be driven. You know, it's being pushed by government and government imperatives, which I think is important. And then, of course, there is the sort of things like these electric vehicles. They're more viewed like, you know, like an iPhone, and then there's this S-curve of adoption. So you're going to have this early stage where we're now slow growth, and then like the iPhone, you know, massive growth up to there, explosion in that uptake. Now, to do that, we need production. We need upstream production. This is, you know, along with cobalt, along with nickel. You know, those are interesting metals in themselves, but for us, lithium is key. And I don't feel, certainly not in the next 10 to 20 years, there's a replacement for lithium on the market or replacement technology that's going to be advanced. And the cost curves per kilowatt hour have dropped dramatically from, you know, where it is now about $300 a kilowatt hour to about $150 a kilowatt hour. And then there's really, you've got a new entrant, it's got to compete number one on the efficiency. Someone said lithium is in the energy density stupid, because it is so, it's so lightweight, it's got so high energy density that it's very hard to replace as an element. And I think if there is a replacement technology, it's going to still involve lithium, whether it be lithium air batteries or another element.
It's used across a lot of sectors, isn't it?
Yeah.
By the way, thanks very much for your time.
No, thank you.
Absolute genuine.
Cheers.
Cheers. Thank you.
You.